Hi, this is Chris from FX Empire taking a look at Elliott wave principle. In front of you, I have a zoomed out 4-hour DAX chart, but this can work on anything. Elliott wave principle is a technical analysis theory that the market moves in repeating patterns given enough time. And it's named after Ralph Nelson Elliott, who released a book in 1938 based upon this principle. It is a very complex trading principle, though, so this is going to be an overview only. There are books that literally have 1,000 pages written in them about this type of trading, so keep that in mind. Now, the idea is that the market moves in certain patterns, and I will go ahead and lay some of them out here. And the idea is that it just repeats itself again and again. So as I draw all of these lines, I'll go ahead and start numbering them. And this is how he would look at the market. So on the way up, there were numbers, and on the way down, there were letters. So if you hear somebody talk about a B wave, then that's a retracement of a fall after a peak. So there are a lot of rules to this. You get 1, and then you pull back to 2, but 2 cannot engulf 1. This is an impulsive wave. 2 pulls back, a little bit of retraction, a little bit of momentum building. And then 3 is the most impulsive wave, typically. This is where most of the uptrend is made. We pull back 4, cannot go below 1. Digging into this area here, and then we peak out at 5, and then we get A, B, and C. Very similar. You just kind of wipe out most or all of the gains. It can vary. But most people trade Elliott wave based upon the numeral waves over here. Don't worry so much about the corrective waves. That can be used. The problem is, and there are a multitude of issues with Elliott wave, is that although it does tend to prove itself over time, the reality is that it's very difficult to trade. It is something that takes a lot of education in. It is something that some traders follow very diligently, though, so you have to be aware of that. The problem is, for myself, there is a running joke that if you can get 5 Elliott traders in the same room, I bet I can show you 5 different wave counts. And that is true. It is very subjective. However, you see how it works in the uptrend. It can work in the same way in a downtrend. You would just have 1, 2, 3, 4, 5, and you can see where we return. So there is some validity to Elliott wave. It's just you have to be very free with your stops is probably the best way. So in a sense, if you were to trade Elliott wave, say we're going up again, and we're going to trade this. If you decided to trade the second wave, maybe perhaps once we break above 1, then your stop needs to be down here, and you really don't know when 3 ends. You have to wait for another pullback, and then maybe move your stop up there and trade that. Very difficult. It is something that is worth exploring, though, to at least understand the thought process, because so many people do follow it. And as I said before, you could make the argument for the downtrending Elliott wave. So as I draw this, that's 1, 2, 3, 4, 5, and then A, B, and C. So it works in both directions. It just kind of depends on how you go. A lot of times, Elliott wave is probably best used with a filter such as a moving average. But there is something to this. So it certainly is something worth exploring. But like I said, you will find books that literally have hundreds upon hundreds of pages about trading this stuff.